Hello and welcome to March 10th. This trade exited yesterday on March 9th. We're one day late. I apologize. Hectic lifestyle. I am a devoted trader, but I am not a slave to trade. That said, let's move on. Okay, so here are the numbers. This trade initiated on the 28th of February and exited on the 9th. It cost us 180. It cost us $1.85. Remember that one contract in options is 100 shares. 100 shares is $885, and we got out with 578. With that said, let's go ahead and bring up the calculator to show our numbers. And here we are. So we go with 5.78 as our exit, minus the cost of $1.85. Divide that by the $1.85 of the cost as a percentage, and our net profit was 212% net profit. Okay, that going on. So how much money did we make? That's what's more important. So let's go ahead and clear that out. Remember now, options are by hundreds. So plus 578 minus 185 times two contracts right there. 786, and two contracts cost us approximately $3 in fees. So we netted 783 out of the trade, out the door, which contributed, got back our buying power to 185, plus an additional 783 added to the buying power. And that's what's important. The important thing is, at the end of the day, is what is your account and what is your buying power. Let's go on to the chart now. And now you go, great. We got to the chart with less than 2 minutes. That was good. So the trade was set up here. As you see, the price closed above the 50-day EMA right there. And there it is. So price closed above the 50-day EMA. It's a very popular, the 50 EMA and the 50 SMA, both simple and the exponential, are extremely popular and industry acceptable standard. And then we made our stop. You had the regression channel right here. So I had my two regression channel, and I got to the lowest point was here, drew it out to my entry candle there. And then I put my stop here at the second deviation. The second deviation was here at, well, this doesn't show the value, but there, 84.05, which is going to be our stop. Our target was up here at 105 for 3-to-1. And our expiration was May 20th. We got into a May 20th. Now, what happened to May 20th? Well, what happened on May 20th was, I'm going to go into the right wrong, is that when I extended out the regression channel, extend to the right, the cross was way out here past March and way past April. So I went to the expiration date after the cross point of the third ratio and the medium of the regression channel. That's how I do it. So now let's cancel that right extension so we will see the screen. And our objective is we have to abide by our exit rules. And that's what it becomes the next important thing. You have to establish your exit rules. Now here, my first exit is the first ratio down here on the 3-to-1. So you can, and you know, look, this is a swing low right there. You say, okay, I'm going to take it off that swing low with a little bit of a buffer. And that buffer can be anywhere from Rockwell trading, it's 1 penny. Some traders, it's exactly the low that it is, which is a little dangerous because price loves to test the lows before bouncing and going back up again. Other schools use the 10% of the ATR. Or they'll go down to the 1 hour or the 5-minute chart and use the ATR there as a buffer to the swing low. So you have to come up with your own set of rules and stick to it. The most important thing is, by the theory of large numbers, a working strategy will pay off as long as you stick to the same criteria in and out all the time. So exit rules are, the first ratio, if it comes down here and takes me out 1, that's, I'm risking $1 to make 3. The other exit rule is that when price has cleared, what I call cleared the gantry, I will go to the entry point, also known as EPS, entry entry price stop. Now that comes from the Market Wizard books. Jack Swagger introduced lots of these traders, and many of the traders would move their stop to the entry point, equity traders and options traders. Then after that, I will look to see if it closes above the first ratio right there, and then move the stop up to that first ratio. So if it reverses on me, and then I get out. Now, this is a bit wide. Most of my trades are a little narrower, but this turned out to be much wider than my expectations. But the bottom line is I have my set rules. The other rule is ROI 100. So right in here somewhere, we hit ROI 100. I forgot if it was, I'm not sure if it was on this day. It was pretty much on this day. That's right. We hit over 100 ROI on this close here. Well, then that rule then switches to the last bar low exit rule, which is right there. Last bar low exit right there. Then this hit 200. Now, I do have a rule called the 200, and that is that if price is over 200, if price opens below that close, I'm out, which means I should have been out this day. I failed. Yes, I failed to do that. I went to last bar low because a lot of things I got a lot on my plate. Unfortunately, it's one of my biggest bad habits. So I went last bar low, and then I went last bar low here. When this closed, this was 300 ROI right there. March 7th, 300 ROI. This is March 7th right there. You can see it, March 7th. This was, and the March 7th rule is if price opens, if price is greater than the close, then you exit, which means I would have exited here. And I didn't. Or I could have gone right off, continue with the 200 ROI rule and exited right there, virtually at the top. But because I got, like I said, I made a mistake, and I went to 95.05, which is the low here off this candle, and I got stopped out here on this day, which is March 9th, right there. But was it a bad trade? No. Let's look over the numbers real quick. We're running out of time here, so I apologize for getting too crazy into the exit rules, but that comes up in discussion with my fellow traders. What are my exit rules? So here we are. That should be 3.9, not 3.8. 212, as you saw in the calculator. 293 in the return for the cash. 286. That actually should be $3 in fees, and it did owe me $5.94, so that got a nice contribution. All right, let's review the evaluation. Okay, what did we do right? What did we do wrong, and what could we do better? What we did right was entered according to rules. That was good. Wrong. Reaching 300 ROI needed to exit at the top. That was the wrong. Better. Stay to the ROI exit rules, especially ROIs over 200. That's it. So with that said, we'll conclude today's report for AEP at 212 in 11 days. And I thank you very much for stopping by and checking it out.